And we also remain in the world of tokenization and have our first panel on the topic. And I'm already joined by Lena Grale. She is board member of the Digital Euro Association, and she will be joined by a great set of panelists, and it will be about tokenized money. Lena, I hand over to you. Enjoy.
Thank you so much for the warm introduction. So I'd like to ask my panel to join me on stage. Mark, you can come back down. We have Manuel Klein from Deutsche Bank, Heiko Nix from Siemens, and Mehtar Said from JP Morgan. Hi. So thank you so much for joining me. The topic of our panel is tokenized markets need tokenized money. Europe's roadmap from pilots to production. So we've already heard a bit about pilots from Mark. Thank you for your keynote. This is the 4th Digital Euro conference. I'm listening to panels, and every time, every year, I hear a lot about pilots. Every now and then, new pilots are announced, but today we want to talk about how to actually get out of the pilot phase and start properly into the production phase. Mark, I think your keynote has highlighted that there is a bit of a shift. We are definitely ending the experimental phase of things, but there are definitely still hurdles, still technical issues, operational issues, still islands going on, and still a lot of pilots. So that's what we want to discuss today. I'm really happy that I have such a diverse panel here, industry, banks, infrastructure. I'd like to ask each and one of you to introduce themselves for maybe just 2 minutes, if possible. And if you don't mind, please talk a bit about your focus in the tokenization world.
I can go first. Nice to see you all. I'm Metaj. I'm part of the Kinexys business at JP Morgan. I lead the Europe, Middle East, and Africa business. Me and my team are focused on adoption of our solutions. So our job is to face the industry every single day and answer questions on why this technology, what benefit this brings in, and what the business case looks like, etc. So very, very focused on definitely not being in the pilot phase. We've been fortunate to be an early adopter in this space, and we've definitely scaled way ahead of pilots. But key focus is to make sure that the industry is aware of this technology and the benefits it brings with it.
Hey everybody, I'm Mark Rakmilovich. If you weren't here for the keynote, I run a team at Oracle responsible for digital assets and blockchain from product development, product management perspective. We've been involved in the space since 2016-17, launched our first blockchain solution in 2018. And in more recent years, been involved in digital assets, in particular the central bank digital currency projects and some commercial banks, tokenized deposits, and so on. So I think from an integration perspective, we'll get into that later, but there's a lot of things we've seen that I'm glad to share.
Yeah, pleasure to see the room so full. I'm Manuel Klein from Deutsche Bank. So I had a team which we call market management for payments and digital currencies, with a focus on cross-border payment innovation that stems across traditional systems in the traditional world, with SWIFT innovating as well, but then everything related to digital currencies as well. All 4 forms of digital money, so retail and wholesale central bank digital currency, where the digital euro falls in, and then tokenized deposits and stablecoin as well. Nice to meet you.
Nice to meet you too all. Thanks for coming. Heiko Nix from Siemens, head of cash management and payments. So we are doing with the team everything incoming, outgoing cash and payments. So for us, it's important to lead this discussion as a technology company. We started quite early, I have to say, with Kinexys, that time Onyx, by the way. So we have a little bit of experience with this, and it also comes from our nature. I'm actually coming from the IT side. And when I joined Treasury 6 years ago, I felt a little bit like an alien, right? Because this is really unknown. In the moment, I have to see more and more people with an IT background in Treasury. So that's why when we started it also, we had a lot of discussions. So why we are doing this, and we just did it because we could do it. So let's discuss this in more detail.
Thank you so much. That's a good start. So before we start with the first round of questions, I'd just like to remind the audience that you can ask questions to the panelists, either to one specific of one of them or to the group of panelists. You can do so via the conference app, Swapcard, so feel free to ask questions and I'll try to direct them to the panelists. So let's start off with a bit of a reality check. Where do we stand right now? Heiko, I'd like to ask you first. Siemens has been a pioneer in tokenization. And the overarching question of this panel is from roadmap to production. Where do you still see the biggest friction points in this?
I would say 2 friction points. Number one is not a technical one. It is, I think, mindset. Yeah, mindset shift. I think the idea of what blockchain brings and tokenization is part of it is a little bit, the ideas behind. So tokenization, programmability, 24/7, all these features, they are new to Treasury. And that's why mindset shift is important to use it, to leverage this technology in Treasury, because I would say in Treasury we are not really used to working in that space. The second is really, and this is for me the biggest one, is reach. Whenever I do a payment, it's something between 2 counterparties. So when I join a stablecoin environment or any environment where I can make payments, it is important for me to find my counterparty in it, be it my vendor, employees, or in getting charged or can charge a customer. So that's why these 2, I would say, number one is the reach topic, and I still see there's a lot of fragmentation. And actually what we wanted to overcome with this blockchain technology and stablecoins and all this is going away from fragmentation, which we have in the banking sector today. But what we're actually doing, what I'm seeing is with every new stablecoin, we do exactly the same. We are just copying, that fragmentation into the 24/7 world.
Yeah, that's a really interesting perspective already. Mark, would you agree to that, or do you see similar hurdles or maybe different hurdles on this roadway to production?
Yeah, no, certainly I agree with, particularly as a user mindset. When we talk to folks in the banks in particular, and sometimes also in the corporate level treasurers and so on, they're still struggling to get their mind around some of the fundamental concepts and differences here. And one of the things we're trying to do from that side is to try to make it as transparent and straightforward. So one of the things we've been working on with our ERP team, when we integrate this solution, you want to do account payable, kind of payment, right? You go into your ERP system, you find some invoices that need to be processed, you go through, they get approved, verified, and then you go select whatever, payment, whatever bank, whatever currency you want. And we want the blockchain payment to be basically indistinguishable as much as possible. Maybe it's a different currency symbol, maybe, there is some setup information onboarding that happened ahead of time, it's a little bit different. But the way that you actually execute payment on that invoice is as transparent, as compatible to the current, fiat payment, if you will, on B2B side as possible. So that's one area. The other area, I would say from an implementation perspective, where we see significant challenges are in the integration space again. So the blockchain, particularly for permission blockchain implementation, if it's, let's say, tokenized deposits or central bank digital currency, also typically on the permission chain, the blockchain ledger infrastructure and all of the things that need to happen there are pretty mature. But payment does not happen just in blockchain, right? There is workflow, on-chain, off-chain, workflow orchestration, the KYC checking, the sanction screening, when you're issuing and doing an on-ramp, onboarding somebody. All of those things need to be checked against existing systems. And that integration is a lot of work. The frameworks around integration are fairly brittle. You don't want to do point-to-point APIs if you can avoid it, because you have to change them every week. So having a kind of a API infrastructure, but then being able to integrate using workflow orchestration is important. Ability to do atomic integration between off-chain and on-chain systems is critical, right? Because you don't want things happening and creating exceptions on one side and then causing problems because you have to then manually reconcile on the other side. I mean, that's no fun. We've been there before. We know how hard manual reconciliation could be. So we want to avoid it by ensuring atomic settlement, atomic connectivity, transaction support between off-chain and on-chain systems. That's very critical. And the third point, I think, is around implementation of supervisory controls. Where you see payments being done on blockchain today, they're using fairly simple-minded versions of the ERC standards implementations. Yes, I can do a token transfer from A to B, but what about multi-layer approvals? What about limits, holding limits, transaction limits? What about many other things that from a regulatory perspective, banks need to ensure there? What about administrative clawback if something went wrong? So adding those supervisory controls and being able to do them in an automated fashion within the smart contract framework is another area that I think is significant, and that's what we've been investing in.
Thank you. Manuel, I've been seeing you nodding a bit, especially on the part with the supervisory controls. I think that's an interesting one. Like, is Deutsche Bank worried about not being able to check limits, or what else did you talk about, like regulatory issues, when moving more towards tokenization? Is that an issue?
I mean, as you say, the integration into core banking systems is a big area of focus for most banks, I would say, that now also aim to integrate any tokenized deposit solution, for example, or also stablecoin for real transfers. I would like to step back a bit on what it is that we are actually talking about, right? So tokenized deposit platforms, we heard it from you as well. We have Kinexys here as well. I'm looking forward to your contribution as well. Is basically a core ledger, right? So it's a core banking system ultimately where accounts are represented, right? This is what tokenized deposits are. It's basically bank accounts on a new technology, on a blockchain. You can also represent bank accounts in other databases or even a spreadsheet. Here in this case, it's a smart contract on a blockchain. And the rest, as you also alluded to, it usually sits off-chain, all of these other systems, right? So it's not that there's a token that can be sent to anywhere, that can be held by anyone. No, it's still an account with one particular bank, and that needs to be wired into all the other internal systems. Now, when it comes to hurdles, for example, the reach that you also mentioned, at the moment, this is really bank-centric infrastructure, right? So we have Kinexys as a solution from JP Morgan. Deutsche Bank is looking into that as well to allow 24/7 availability of funds between accounts at the same bank. Now, that's obviously very different to payments, how they traditionally work, where you also want to send funds to another bank, right? So the multi-bank capability, for example, needs to be ensured. And this is where other projects come into play. So we jointly work on Partior, for example, which also operates on the shared ledger infrastructure. But the multi-bank solution is also still an issue, yeah, that every solution needs to solve for. Swift Ledger is looking into that. They also need a settlement asset, how to settle between the different banks. Project Agora comes into play as well, of the BIS. And it's complex, yeah? So tokenized deposits, I would say what we at the moment see is bank-centric, internal 24/7 bookings, yeah, between accounts held at the same bank. That's great. You can do already a lot with that. But the real breakthrough would be multi-bank connectivity, which is much harder, right? And this is why I think also still we are a little bit in a pilot phase, right? Beyond internal processing, internal book-to-book payments within one bank. And then come stablecoins, which basically sit outside of the traditional banking system, which is a type of money that so far did not exist. A bearer instrument that technically anyone in this world can hold. Now, if banks want to operate with these stablecoins, you also have to ensure that you do it in a regulatory compliant manner, obviously, right? So you cannot send it to anyone in this world where you don't know who that is. And that restricts also, I think, stablecoins from becoming a very easy way to reach anyone in the world and send those stablecoins to anyone in the world, yeah? And also here, I think, the industry is, I would say, much earlier than many would think, right, in terms of adoption, because the hurdles from an infrastructure perspective, from a regulatory perspective, they also need to be overcome. So, yeah, I try to bring in a bit realistic views on these topics. Yes, it's frustrating that we are still in pilot phase, right? Yes, we see some initiatives that are live now, but again, very bank-centric, right? Which is all about 24/7 movements of funds, internal bookings, you could argue. And let's see whether stablecoins are faster than, let's say, multi-bank solutions like Project Agora, Swift Ledger, and so forth. Yeah.
Do you think, by the way, that I think Deutsche Bank's been involved with a CBMT project as well, right? That's a multi-bank tokenized deposit infrastructure environment, right, for multiple banks. Do you see that as a promising approach?
Yeah, I think it's one of the approaches which aims to solve the problem of multi-bank connectivity, right? Ultimately, what it does is it records interbank liabilities on a ledger, which says, well, the sending bank still owes money to the recipient bank, and then the question is, would the recipient bank already credit? But yeah, it's one of the initiatives that are discussed. Let's see where it heads toward. Yeah.
Okay, thank you very much. So we've already heard Kinexys quite a few times now, so it's definitely your turn, Matej. I'm still with the very first question of this panel. So have we already moved out of the pilot phase? And Manuel has said not really, and there are reasons for that, but Kinexys is already a significant player in the market and moves significant amounts of volume daily. So I'd like to ask you, on the journey of Kinexys, where did you see the turning point from when it wasn't just a pilot, like a little project on the side anymore, but it was proper production mode and proper infrastructure?
My answer might be slightly different to what the rest of the industry says, primarily because we've started very, very early. So in fact, not many know that we started a blockchain center of excellence 10 years ago, when the industry was questioning the very technology itself. So that was a good start, and then we played around with it for 5 years, and then almost 5 years ago we established Onyx, which was a formal business unit, and it was definitely the pilot phase. And then we started with industry leaders and design partners. I mean, you could call Siemens, the likes of Siemens, or probably Ant Financial, whatever you want to, but it definitely helped us understand that there is a need for money to move efficiently. Again, it's a big challenge for us as well, because we ourselves move $10 trillion every day. That's 30% of US dollars moving through our books. And when we look at our own flows, we can definitely see areas of improvement. And then you start questioning yourselves, like, how do you do that? Interoperability is great, but imagine if 5 years ago we went in the industry and said, we have a multi-bank, multi-chain, tokenized bank solution, let's get started. Nobody would even say yes. So unfortunately, pilots are the way to start. We all are very critical of pilots, but without pilots, how would you scale a pilot? So that's one point. The second point is, I think having design partners like Siemens, etc., really helped us, because we built the basic product. We could move dollars only from one branch to the other. Then we kind of built upon it, saying, okay, if euros moved, does this help, etc. The fundamental question which we asked ourselves and the industry is, would you benefit if money moved when it otherwise couldn't move? If you move dollars on a weekend, does it help? If you converted dollars into euros on a Thanksgiving day, does it help? I think that was the biggest question for us, and when the answer was a resounding yes, technology is an enabler to it. Now, even the technology, I think that when the technology is the protagonist of a discussion, then the technology is still irrelevant, like it's not doing its bit. As much as the industry hates bank accounts and bank deposits, they're the most comfortable with bank accounts and bank deposits. You could be critical with the bank account, but you will end up having a bank account. You'll have hundreds of them. So what our product folks did was, there's a need in the industry, but there's a resistance to behavioral change. Can you bring a technology variant to the existing behavior? So we put bank accounts on blockchain. We didn't put a stablecoin or a token. We put bank accounts on blockchain. Until date, we've moved $3 trillion just by putting bank accounts on blockchain. From our clients' perspective, oh, this is just a bank account. Then we went one step ahead, saying, okay, you have 2-3 currencies. What can you do more? Then we added FX, because then obviously global multinational corporates have regional liquidity requirements. So I think for us, the key part was to start with some pioneering institutions, build on top of it. Fortunately, we were able to scale. And once you have an ecosystem, that ecosystem has a multiplier effect already. So for us, fortunately, we've kind of broken away from the pilot phase already, but in a good way, we are seeing kind of our school of thought being validated. Now the whole industry is also kind of working towards it. But I would always, being somebody who's been part of those pilots and who's seen it scale, you cannot be more overly critical of a pilot because that is how it all starts.
Yeah, maybe I can add a little bit, it's important, coming away from slideware really to soft and hardware. Yeah, so because, many people talk about it, right, but very little have really, practical experience with implementing this. And when we actually started implementing a stablecoin, the JP Morgan stablecoin, 1 year after in the implementation, we ended up with a bank account on blockchain because that was very easy to my accounting teams to say, guys, this is a bank account. It looks like a bank account. It smells like a bank account. It is a bank account. So that was very helpful in the transition when I talk about mindset to make that possible. So that's why, for us, it is a bank account. It has all the required bank account. It has even an end-of-day balance because we need some end-of-day balances for the insurance and also for the accounting purposes. So even we have this to make it really easy of integration and migration paths, right? So that's why, yeah, that you have to do it. You have to just to do it. You have to experience it, and then you know how to use it.
But Heiko, I wanted to ask you another question about this. To what extent do you as Siemens even care what type of digital money the money you move is, as long as it's instant, 24/7, on-chain? It could be many different types of money.
The short or the long answer? No, I don't care.
You have 19 minutes. You don't care. Okay.
No, I really don't care because it must serve the purpose. And I talked about the reach. Can I reach my counterparties? This is most. Can I do this efficiently? I think what's important is, and I think the discussion in the moment is very much focused on the payment side. I think we need to broaden that view and also talk about why we are making that payment. And this is part of the story. So we need to think about the end-to-end process. Why we are doing this payment, what is the purpose, do we need 24/7? And why is instant for us interesting? Because of finality. We know in that case the payment is made, and that helps us on the treasury side, but it helps also on the industry side. So again, I would say after now 5 years having experience with blockchain, not only on Kinexys, also other banking partners provide such an infrastructure to us. I think we are beyond a blockchain. What for us is interesting are the features they came with blockchain. So I would say we are blockchain inspired, but I don't care about if it's blockchain or not, right? That's just a technology that enables this what we want to do. Serving the purpose. This is important.
Yeah. But if you don't care,
yes.
roughly spoken, and other big players in the industry also don't care, and then they also always choose to, when they end up choosing different forms of digital money, then how do they actually speak to each other? A question I wanted to ask to Mark, because in your keynote earlier you introduced the different forms of digital money, stablecoin, CBMT, whatnot, but how do you imagine a world where every company, not everyone, but like they use different forms of digital money, and how does it all connect in the end?
Well, I mean, I think for most, enterprise companies, or small, medium businesses and so on, at the end of the day, I think they're going to be similarly, not caring about the particular form of money as long as they can make the payment. They know it's going to reach the counterparty and it's all going to be proper, legitimate with finality and all of that. So what we see a number of banks actually looking at is ability to support omnibus wallets where they actually handle the blockchain element transparent to the customer. The customer is just issuing a payment, right? They don't even know they're paying, I don't know, dollar or certain dollar amount that needs to be transferred, let's say in euros or Singapore dollars or whatever. The bank can then decide based on routing optimizations, based on cost, based on time of day, availability, and so on, which rails to use. I mean, banks to some extent do that today, right? I mean, they provide that kind of optimization, and they charge for that service. I think with blockchain and omnibus accounts are going to be, in many cases, doing the same for customers that don't particularly have a specific requirement as to which rails to use. There is also, of course, a situation where, and this is probably not the place to say it, that there are customers, enterprise customers, who are looking to do those payments without going through the banks. And then they're going to care because they have to do the same things, right? They have to implement whatever KYC, sanction screening, and we're trying to provide solutions that kind of from an ERP and then digital asset platform perspective integration provide those capabilities if they want to perform some of those functions on their own. And then they need to be able to use some kind of optimization service, routing service, et cetera, for the payments.
Thank you. Another question I had, I'm not sure if Manu is the right one to answer or Metaj. I'll just address it to both of you. Yeah. I was wondering where the demand actually came from in the first place, because sometimes you hear people say this is very regulation driven, and then maybe if I would ask Heiko, he would say it's demand driven, the industry needs it. But maybe JP Morgan just had a really good idea and wanted to market it. So what do you think about that?
That would be a very bad marketing expenditure if we spend so much money and time behind marketing. I would definitely let Manuel go, but in terms of the demand, like I said, it goes down to a fundamental question of, is there a monetizable gap today? Of course, as commercial institutions, you have to look at commercial value to both sides. Is there a monetizable gap if this 100 million Singapore dollars was in Singapore versus in London? Just take a simple example. If you had $100 million of an obligation in Singapore on a Monday morning, you either send the money on a Friday afternoon, today you're converting it and sending it to Singapore on a Monday morning, or you're sending it on a Monday morning. There's at least $25,000 of net interest income, which today the corporate loses. So there's significant demand. Now, we have large corporations, we have fintechs, financial PSPs who move money, who depend extremely highly on pre-funding. Pre-funding is one of the biggest challenges in cross-border payments, as you would know. So there was definitely a demand, and then goes back to the point on how did we enable it. Today, when I send, for example, Heiko 50 euros, he sees 50 euros on his phone because somebody posted an entry on his account. Nobody gave him 50 euros. That's how money moves. When somebody posts an entry on a ledger, that's how money moves, which means if you could post entries on a ledger all the time, money will move all the time. Which means if you could post entries on multiple bank ledgers all the time, money would move between all the banks all the time. Of course, ideal. So Kinexys is a single bank ledger, so I can move money around on a JP Morgan ledger. Partior is a multi-bank ledger. Swift, I think, is enabling a universal. I think as long as you address the ledgers, the money will move. Like Heiko said, the industry couldn't care less. And there is definitely a demand because there's pockets of pre-funded billions, if not trillions, of pre-funded liquidity across the global payments ecosystem, which can actually be reshuffled, and there's significant monetizable gaps for the industry and for the institutions helping.
Yeah, I mean, what we have done over the last months, and actually also like 1.5 years, is talking a lot to clients whether there's demand for blockchain solutions, right? And I mean, maybe also coming back to what you've said, clearly there are some industry leaders that definitely want to experiment and also understand what blockchain can do, but usually when we talk to treasurers, they say, look, I couldn't care less whether it's blockchain or whether it's any other solution. And then, the benefits that you can get from tokenized deposits or any other money on chain is, again, you said it 24/7, right? And then some sort of programmability. Now, what we came to realization is that at least many of the corporates that we talk to would like to extend their cutoff times to have more flexibility to send payments later, but not necessarily on a 24/7 basis, right? So the industry heads towards that, and clearly if you had an infrastructure that is up and running on a 24/7 basis, you also need to think about the liquidity impact, right? That needs to be steered as well. That would be optimal. But I think there's lots of hype around 24/7 availability. Maybe it's not yet that much required, right? And then programmability is clearly also a big aspect, where we see also multi-bank capability as the demand that we see from our corporates, right? So we also have our internal cash pool engine that can orchestrate cash pools and cash sweeps and provide a lot of automation. And clearly a bank can, provide more and more on their own platforms. But I think what we hear a lot from our corporates is the multi-bank connectivity again, right? Where there's logic maybe even sitting in corporate systems or in ERP and TMS systems And then APIs can, fill the gap to provide very efficient payment instructions and then also account statements. So I think it's not a pancreas for everything, right? Blockchain and tokenized money, that should not be forgotten. Most clients that we talk to don't say, I want it on a blockchain. They say, I want to have more flexibility. I want to have more logic, maybe in an external system, an internal system. And it could be that an internal blockchain for tokenized deposits is the right choice. Maybe others as well.
Yeah, I would support this because we should not always think about what problem can be fixed with this. We should also think about what are the opportunities that are opened, right, by such a technology. And when Naveen gave his first presentation in 2021 to us, right, to blockchain technology and what you have done so far, we had actually really no clue what to do with this, but it sounded so fantastic that we had to implement it. So that's why that was quite convincing, obviously. And since then we have developed a lot also in co-creation. We developed a lot of features which we are currently using on a day-to-day treasury business. No? So not just looking on problems, also looking at what opportunities are opened up.
So we
I
move.
just wonder on 24/7 basis if what we're beginning to see is that humans don't do 24/7, but AI agents do, and AI agent enabled systems. I mean, like we see that across supply chain, ERPs, many other things. May want to do transaction at 2 a.m. because of certain issue, whatever that needs to be handled. I wonder if that's something that the banks are looking to address.
Yeah, I mean, I can start. There's lots of hype around AI agents and stablecoins at the moment, definitely, right? Because stablecoins are this, at least technically, globally fungible money that anyone can hold as a bearer instrument. Yeah, very, very interesting developments, I would say. I would say representing a bank, not something that we can very easily touch because we need to ensure that the stablecoin transfer also fulfills the regulatory requirements. So we need to know who the beneficiary is. We need to convey all the address information to screen and so forth. That is also something that I think is yet to be answered, how those transfers can be done very much in a regulatory compliant manner. If it's just peer-to-peer between AI agents that don't even have a jurisdictional nature, then maybe that works. I don't know. I'm not an expert here from a legal perspective, but yeah, it's definitely a trend that we see in the industry. I'm quite sure. Yeah.
And especially for stablecoins, I remember our prep call last week. It's also an interesting question to what extent the stablecoin hype is quite regulation-driven and maybe a bit less demand-driven than other initiatives.
I think it's a weirdly interconnected influence which the stablecoins have had. For example, if you take the amount of stablecoins in circulation today, most of it is US dollars, and then that kind of has moved Europe into action, which has resulted in many conversations with many treasurers. Then that cycle has resulted in establishing that there is a need for money to move outside of traditional banking hours. So in a I don't know, weird is a word, but in a very convoluted way, the whole stablecoin hype actually questioned the whole industry. Do you actually need this? And the need was established, and then the bigger question now is how do I meet that need? And as if you can see, obviously there's a lot of action from a lot of banks in Europe of late, and that probably is an indirect result of that chain of events where now large banks are now speaking to the industry much more and saying, do you care if it's a stablecoin as long as I'm able to move your money 24/7? So then the banks would then start looking at a compliant way of meeting those needs. So if you were to indirectly attribute a benefit to the whole stablecoin hype, I think it was a blessing in disguise for the whole industry. Would the entire industry use a stablecoin or forms of money? I think there's many dynamics to that. Digital money obviously is going to be is here to stay. I think there's no denying that. Are stablecoins going to be super relevant? I think forms of those would be super relevant. Some of those forms might not be at scale. as long as I think commercial bank money will still end up being relevant somehow. Now, if that money represents a tokenized deposit, a deposit token, or a consortium-backed stablecoin, it could be anything, but I think as long as it's commercial bank money, it ends up being scalable. The non-bank issued stablecoins, I think, will still have a role to play for specific use cases. It's also then on the industry to figure out how these kind of interoperate. Interoperability is not that easy. I travel quite a bit. The chargers don't interoperate these days. Like, I think we just conveniently forget that there's many aspects of our life which don't interoperate. We found a hack. So I think the industry will find a hack as to how to stitch together all of these disparate infrastructures behind the scenes so that the users actually don't care. But I think stablecoins and the regulation in the US have had a convoluted impact on the entire 24/7 blockchain world.
So we only have 4 more minutes. And before we end, I would like to give the audience a quick outlook, because we wanted to originally talk about the roadmap to tokenization. Mark, maybe to you, if we wanted to ensure, theoretically, that 2027 was the year of mass adoption of tokenization, what do you think is the one technical standard or maybe one rule book that would need to be implemented on a large scale?
Well, I think probably the biggest barriers and impediments that people see is interoperability, multi-bank, multi-ledger, and I think the standards that are emerging in that space are going to be my pick for kind of, where to focus on. So there is work that has been done over the last couple of years on something called Secure Asset Transfer Protocol, SATP, moving through IETF standards and also ISO standards body. We participate in the technical committee 307 that's focused on blockchain technologies. There are subgroups there. And with some partners we've been promoting. I think it's almost complete, and it's soon to be moving into an RFC standard space, right? So, it's basically, if you remember, in the early days of internet, when you had to struggle with sending email across disparate systems, I mean, you're kind of in the same state right now, right? But there were standards, RFC standards, and now you just don't give it a second thought about how to make sure that my email gets into your mailbox, even though the systems may be disparate. I think that SATP protocol and things based on that, maybe there is an evolution of that over time, is going to be that kind of enabler for cross-ledger atomic transactions. And so that's going to, I think, be my vote for the next, let's say, 6 to 12 months from a standards perspective.
Manuel, would you agree to that, or do you think it will be a very diverse world, very colorful, everyone has different standards and they somehow need to agree to each other?
I mean, in my head, there's 2 scenarios. Either every bank builds their own ledger and their own network, and then you have to stitch them together, maybe through solutions like Pontes from the ECB, or Finality as a settlement asset, or other initiatives. London Stock Exchange, LSEG, also has an initiative. So stitching different ledgers together that will also work on different standards, right? Or the industry really comes together and tries to build something together, including the settlement piece with central banks together. Now, the latter is more complex, obviously, and requires buy-in from lots and lots of different industry bodies, banks, central banks. The project is Project Agora of the BIS. Let's see whether that flies and whether that will actually come to realization. But these are the 2 ways that I see tokenized deposits eventually coming to mass scale, let's say. And then there's stablecoins, where I'm also still puzzled of how quickly that uptake can be realized, and whether it's really a B2B flow in the masses, right? Because you have to switch your deposit into a stablecoin first. You have to go through an on-ramp institute. Now, banks could play that. Will banks play that? When will they play that, right? Then you need to have regulation around the world. So it's relatively early stage, I would say, for mass adoption here as well. So yeah, there's different paths forward, but nothing that might lead to a very, very quick solution, I would say. Yeah.
I would have plenty more questions, but I already see the timekeeper. No? Okay.
If you want to have wrap-up thoughts, please Feel free to do so.
I actually think what Manuel just said, speaking in the two scenarios, was a really nice way to wrap up. There are different ways to go, and next year we'll probably meet again at the Digital Euro conference, and then we can discuss again and see what materialized and what not. So I'd like to thank every single one of you for sharing your thoughts today. I really enjoyed this panel. Thank you so much.